Yes, that's right. With this strategy, you can make $2.3 million per year in annual dividends, paying you for doing absolutely nothing other than putting your money where it needs to be. What's up, YouTube? It's Mikey Finance here. I'm going to be giving you guys 3 different ways that you can make $50,000 per year off dividends by investing now until the near future. So let's jump right into it and go over the 3 methods. The first one we'll go over is going to be the longest but the safest. Then we'll do like a medium where it's a little faster, a little more risky. Then we're going to go with one where it's more risk but the speed is exponentially faster. Let's go. Now for the strategy, we're going to be doing something that I've been implementing for the last while. You're going to do $20 per day invested. That equals out to $5,020 per year, if you include that the stock market is only open 251 days per year. So it's not open that full 365 days. So that's why we're only going to do 20 times 251. That comes out to approximately $5,020 per year is what you're going to need to invest to hit this at these numbers. Of course, if you're going to do it a little different, the math will just be slightly different. For the first strategy, we're going to be using the Schwab Dividend Fund. So on this chart, as you can see, we're going to have 2.98% dividend yield per year. And then you're going to have a 5-year growth rate of about 7.53%. Now let's break this down and see how the numbers actually line up here. The number of shares we're going to start with, of course, is just one. We're going to buy the first share at $35.11 is what the current Schwab trades at this time I'm recording the video. So with our annual contribution of $5,020 per year and dividend tax rate that all stays the same, the years invested to hit this, we're going to break that down now. So as you can see over here, 2.98% is going to be your dividend yield percentage on Schwab at the time of this recording. Expected annual dividend increase is going to be 7.53% per year, which is incredible. That's why Schwab is such a good fund. Now, the annual expected appreciation is going to be 10%. Let's just say that Schwab grows 10% every single year, which it's on pace for over the last while, so it's very doable, and Schwab is on pace for that. Now, what you're going to see here is years invested. 43 years is what it's going to take to hit $52,677 per year in dividends. If you don't know what dividends are, it's basically money you get paid out from the company by basically backing them. They give you a fraction of it just for saying, thank you for supporting our company. We're going to give you a certain percent per year, and that's what you're going to earn. Like a high yield saving is similar, but with this, you're getting a growth investing account, a stock that's actually moving up, as well as paid out dividends. That's why Schwab is such a good fund, and it's been one of the best funds over all of time. So it's the safest and the lowest option, but it is efficient. Your ending balance is going to be $4.6 million. So now let's do some math here. All right, now let's say $5,020 times 43 years, you're going to have to spend $215,860 to hit this target goal, which when you think about it, it's not that bad to spend $215,000 and you come out with $4.6 million, but you're only getting $52,000 in annual dividends. That's our goal, but in 43 years, there's much better options. So let's jump into option number 2. Option number 2 is going to be using QQQI, and for this one, it's currently trading at $54.18 per share. Now let's go over their dividend summary. It's going to be 14.13 annual dividend returns. So your annual payout is 14.13%. 5-year growth, it's give or take, we're going to go 1%, but I don't think it's going to be that realistically. We're just going to be generous here. We're going to go over to the dividend calculator once again. So now that we're on the dividend calculator, we see number of shares. We're just going to put 1 because we're not buying anything up front. The share price is 54.11. And annual contribution, once again, $5,020 or $20 per day of the opening of the stock market, 251 days a year. Then to hit our goal, your annual dividend is going to be 14.13%, and expected annual is 1% and appreciation is 1%. I think that's a little high. We'll be generous and give that here, but most likely it's not going to grow that much. Now let's calculate and see what we need here. So bang, 18 years invested. So you're basically cutting your time in more than half, and your ending balance is going to be a lot lower, but you're going to hit your annual dividend amount that you're looking for, that 50,000 number per year, way faster in half the time and investing way less. So with this one, you're going to have an ending balance of 337,000. Now let's go back to the calculator here and see what our number is going to be fully invested if we did $5,020 times 18 years invested. So we're only spending $90,000 of our hard-earned money to hit this number right here. So you're spending $90,000, but you're making $50,000 a year in annual dividends. So that's amazing, and you're ending an account with 337. So for all these options so far, we're going to be using the drip method. So you have to have drip turned on. Drip is basically where you're going to reinvest all of the money that's earning. So if you take your money from your dividends, let's say you make the 14.13%, but you take that and you spend that, that's not going to be drip method. Drip is you put this money in here, it's for 18 years, you're contributing $5,020, but anything you make from that 14% per year gets automatically reinvested back into this. So that's going to make this speed up a lot faster than it would if you turn drip off, or if you're spending that money when you're trying to invest and retire. You don't want to do that. You want the drip method. This is money you're not going to touch, money that's going to work for you in the future. Now let's get over to option 3, the fastest, the most efficient, and the one I'm going to pick every single time. With this one here, let's say we're going to be trading a high volume growth stock, something like Apple. There's a lot of different options, but my personal pick is Apple. If we see over the last 10 years, Apple has done 1,063%. Now that's over 100% a year. We're not going to go with that. That's extremely generous. Let's just cut that number way down, something realistic. Even in the last year, Apple has done 36.69%, which is still incredible, but let's go a little lower. Let's say Apple grows 25% per year, and we're going to invest in a high growth stock instead of going through a dividend fund or something like QQQI, where it's going to be a slow growth stock, or not a growth stock at all, and it's going to give you a higher dividend. We don't want to do that in this strategy. If we want to do this as fast as possible, it's a little more risky, but following a big high growth company like Apple, I think over the next 10 years, if you did something like this, it's going to be very profitable for you in the long run. Now let's hop over to our dividend calculator. Once again, we're going to put Apple in, and the current trade price is $313. Let's say you're 25, you're 30, you want to retire around 55, 60. Okay, we can manage $5,020 per year for 30 years. And if you've been following the same strategy and you've invested the $5,020 or 20-day where the stock market is open into Apple over 30 years, you're going to have $16.5 million. But the thing with Apple is they don't pay dividends. Well, they do. You get $308 in dividends over 30 years from a $16.5 million account. So that's not why we're in Apple. So we're in Apple because you're going to transition this $16.5 million balance into QQQI or Schwab. So let's go with Schwab. Let's say we have Apple and we have 16.5 million of it. We want to exit after 30 years. We're going to go over to the calculator and we're going to do 16.5 million. You're going to times that by 0.03. You're going to make $495,000 per year in annual dividends. You divide that by 12, that's $41,000 a month. Now, imagine what you could do with $41,000 a month of just passive dividends coming in because you took the fast growth strategy, and it's going to be way more efficient in the long run. What you're going to go from here is, let's say, you know what, I'm feeling a little more risky. I have $16.5 million. I want to put it in QQQI. Well, at the end of the day, it's not that risky. It's not a growth stock, of course, because it's a dividend fund where you're going to be making a higher percentage, 14% per year. So let's do 16.5 million times 0.14, $2.3 million per year in dividends by doing this strategy. Now this is in 30 years. If you did the same strategy in 43 years into Schwab, you would not even have close to this. You'd be hitting your goal of $50,000 per month in annual dividends. And if you did it in 18 years on QQQI with the original strategy, yes, you have your 50,000. But if you did this for 30 years, in Apple, you would have $2.3 million per year in annual dividends. We divide that by 12, $192,000 per month. Now imagine this. You're making $192,000 per month in the next 30 years. When you're fully retired, you can do absolutely whatever you want. I bet you that $192,000 per month, this is not per year, per month, is worth way more than your salary now, probably double or even triple. Even people you know, your probably highest earning friend, this is probably almost double their salary. So imagine you're building a portfolio that has something like this as an outcome in the future. Let me know down in the comments below what style you're going to go with. Are you going to be a long-term low-risk investor? Are you going to be that medium section? Or are you going to go all in and get a high-growth stock for the next 30 years, investing $5,020 per year and come out with $2 million per year in annual dividends? Let me know. Again, none of this is financial advice. I'm not a financial advisor. This is stuff I completely do on my own, and I love investing. I'm very passionate about this and trading and everything in between. So none of this is financial advice, but do as you please with your own information you learn from this video. I'll see you guys on the next one. I hope you enjoyed.